The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mojo.
Hi, it's the COB. That
is
time has
COB.
rolled around again. All the stuff you need to know about the day in business and markets. And it's Nadine and Danielle here with you.
Absolutely.
Danny, we knew it was going to be a bad day, didn't we? Boy, we're on a terrible run this week.
Yes, it is. Well, it hasn't been very upbeat, to put it mildly. And it looks like the ASX 200 has closed down 0.6% or 44 points. And probably the SIBO is not too different. And of course, really, really risk off as we go into the FOMC decision, which, if you're keen to get up, I think is around 4 a.m.
Yes, it is.
I'll be passing on that one.
I usually start looking at Twitter not too long after that on FOMC days. I'm so cool.
Really?
But yeah, honestly, I wake
At
up
4?
and I think, well, I don't sleep all that well, but we can talk about that off camera.
Even I'm not that bad, and I'm a terrible market addict.
So yeah, I usually do a little scan of the Twitter sphere around that time just to get myself set that I can go back to sleep and dream about it all for a little while. But yeah, it's been looming large for quite some time.
Yeah.
And we get the dot plots and the conversations that I've been having. It is all about the dot plots. It's all about what we will see in terms of the Fed thinking around future interest rate cuts, not hikes. We're talking cuts now, people. The complicating factor, of course, is, oil and inflation still.
Absolutely, oil and inflation, and the markets actually got a little bit spooked yesterday because the Canadian inflation rate came in a little bit higher than expected. And bond yields have been really moving higher. So US Treasuries are back up to levels that we haven't seen since 2007. So the question really is has the bond market moved in anticipation of the FOMC meeting, or is it going to respond afterwards? But there we've got the SIBO 200 down about 8.6 points, or also 0.6%.
Not very far off the lows of the day.
No.
And we'll wait for these last trades to go through the ASX 200. Perhaps we could close in at the lowest point of the day. So our three themes obviously are waiting for this rates decision coming from the States, what it will mean going forward, whether or not we'll see an initial pop up if rates are held. And Clifford Bennett from ACY Securities had a good chat with me about the potential market action around that time, only then to perhaps retreat if they start to see that maybe those cuts aren't coming through as expected, particularly because he reckons that the Canadian read was sort of the canary in the coal mine, and that central bankers won't want to get it wrong. They won't want to risk their credibility when it comes to inflation if they don't get that genie back in the bottle.
Absolutely.
Different story with China today.
Yeah, interesting. They kept their rates on hold there. So interesting that they haven't pursued yet further easing, although I do think quite a few experts are still expecting further easing going forward, but none there today.
Yeah, I was interested to see the headlines, on Reuters at least, were that China was able to keep its rates steady because of stabilisation in the economic data. I guess there's been a lot of people that I've been reading as well when it comes to China and the data coming from it, just that we need to keep a healthy dose of skepticism really around what's coming from China.
Absolutely. Interestingly, I saw actually Junbei Liu, who she was on, dare I say, another business channel, and she was up in Hong Kong and she'd been to Shanghai, and she was saying it's absolutely booming. Yeah. She thought it was completely being over-egged, but hey ho, we'll have to wait and see.
Interesting, Danny. When it comes to the price of oil, so we did see oil come off slightly today. I was on air about an hour and a half ago, and I saw that Brent crude was down by about $1. But yeah, the energy space. UK inflation is out.
Yeah, just thought I'd say UK inflation has actually just popped up on my screen. So it's dipped to 6.7%, below expectations as food prices ease. So basically, economists polled by Reuters would expect the headline figure to come in at 7% annually and up 0.7% on month, compared to July, which was 6.8% annually and 0.4% month. So the Bank of England will announce its monetary policy decision on Thursday, and currently the market is looking for another 25 basis point hike. which would mean the main bank rate would lift to 5.5%, its highest level since, December 2007. There's that year again. Anyway, that just came up, so that's the latest news there. But we can go back now to the sectors of the day.
Yeah, well, I was just saying it's interesting to note that oil did come off today, but really steep falls for some of these oil and gas plays.
Very steep.
Which I was surprised about, just because of the broader context and not seeing any news associated, with the likes of Woodside or Santos. But there you go, that's what happened. Miners were also hit quite hard today. We did see some key commodity prices coming off, and that includes iron ore and copper. So there's the result there, along with, cracks really showing up in tech today.
Yeah, exactly. That ongoing profit taking as bond yields move up. It's really interesting. I'm just thinking some of those commodity traders that have been really heavy in oil and some of the others, they might be unwinding some of those trades into the FOMC decision. Just a thought there. And let's have a look at the retailers and see how they perform today.
Oddly, one of the only sectors that was higher.
Yes. And I did note also some of the consumer staples were also a little bit firmer today, which is quite interesting. All the retailers, so Lovisa, Super Retail, also finding some love. Woolies, Metcash and Treasury Wine also in the green today. So the defensives doing what they're meant to do, be a bit defensive.
Yeah, I would just, before we get to the corporate news, get you across some detail now coming from Qantas. So today saying that it will pay Alan Joyce, its former CEO who retired and actually exited early, remuneration of $21.4 million for FY23. That is a near tenfold jump from last year. However, Joyce's pay, so they're saying, could be subject to adjustments and clawbacks as it faces those regulatory challenges around illegal ticket sales, which has also, of course, damaged its reputation. So Qantas adding in a statement that it's slashing short-term incentives for senior executives for FY23 by 20%, quote, in recognition of the customer and brand impact of cumulative events. So it looks as if ahead of the AGM, the board trying to get ahead, backpedaling, but also getting ahead of what's set to be a very live meeting. Lots of shareholders very upset about the likelihood of the size of Joyce's payments, considering everything that we know about Qantas and what's happened to its share price. If you haven't been following Joe Aston's Rear Window columns in the AFR, you need to do so. Absolutely magnificent writing as always, but also just like he is a dog with a bone with this one and with the chair, Richard Goyder. So that's a really big development there coming from Qantas.
I think that's going to be the AGM possibly of the decade. We should all go down there.
Invite?
Yeah, well, it's easy. You buy some shares.
Well, yeah, I can't say if I have them or not, but let's move on with some of the news of the day. And speaking of the retailers, Kathmandu was out today. KMD Brands, they have a big stable of brands down significantly, seeing the cost of living, really starting to bite.
Absolutely. And Ingham's, I think they are potentially going on strike. Exactly. Not too much movement there. And Sigma Health, they also reported they've gone back to profitability, if my memory serves me correctly, from a loss. And they also gave guidance going forward.
It declared an interim fully franked dividend, just minuscule, but still. Revenue, though, was down by 8.4%. That's probably the devil in the detail in terms of the share price performance. And look, we don't always look at these small caps right here, but National Wheel and Tire in the news today, it has got an exclusive agreement to be the distributor of Dunlop, I think it is. Oh, geez. Yeah, Dunlop tires in Australia and New Zealand. But Danny, stock of the day?
So, Kathmandu, or CMD Brands, yes. Let's hear from our guests. I think we had Howard, didn't we? Yeah. And Andrew.
Yes. Listen.
It's dirt cheap. So, for somebody who is saying to themselves, maybe it'll turn around, it's only on an 11 PE, but to me they're far better retailers that none of our team investment members would be enthused about this one.
And challenging outlook or market conditions, to use KMD's language. So whenever someone uses the word challenging, that's an amber light that pops up straight away. I also have a look at the daily trade. So, it's a $500 million company, only $216,000 a day traded, so that's pretty light on. So it shows you that the institutions are probably a little bit underwhelmed. Technically, it looks pretty ordinary when we saw that chart just before. It's basically going sort of top right to bottom left. That's certainly the antithesis of what you want. And then some of the metrics that Howard was just talking about: poor return on equity, that's 6%, poor profit margin, PE is pretty challenging relative to that forecast earnings per share. So I can think of lots of reasons not to be there. It is an avoid.
Okay.
Retailers not finding a whole lot of love there, and I just checked, just as a PS, as to when Qantas released that annual report to market, because sometimes, it can be a bit tricky and do it after the market closed, but it did get released at about 3:09 this afternoon. So there you go.
Well, yeah, not a lot of time maybe to dig into it. But hey, let's get into our guest of the day. And William Sines from Macro Capital is joining us. Hey, Will.
Hey.
Thanks
Thank you,
so much
Anna.
for coming in.
Alright.
So, oil prices, they're looking like they're really starting to upset the apple cart.
Indeed. I think that's the key story at the moment. Oil staying quite elevated, above $90 at the moment. And I think the extension of the production cuts out of Russia and Saudi Arabia have gone probably a little bit longer than what people were initially anticipating. I think the other issue tying into supply being tighter at the moment is that US shale oil output has also become also falling off at the moment. And so I think that's the key issue playing into inflation figures right now. We obviously saw US inflation last week come in at 3.7% above the 3.6% forecast there. And on a monthly basis, now that fuel prices are now paying into it, gasoline contributed over half of the increase in inflation there. So really unhelpful for the headline figure. And one of the key issues with oil and consequently fuel prices is that it's highly visible to consumers.
Yeah.
And so what we're likely to see is an anchoring of higher inflation expectations, which could well result in a bit of a wage price spiral. So I think people are a little bit concerned about where that's going right now. And it does just go to show that the Fed can't control every input into inflation. And so we're likely to see that starting to play through into obviously the Fed rates, which we've got tomorrow morning. So at this point in time, no change is expected there. And people were kind of anticipating that November we're going to see a hike. But I think a lot of the concern now is rates going to be higher for longer? And are we going to see additional rate hikes there?
Higher for longer, plateau, not a peak, all of those sort of buzz words. But to your point, the Commonwealth Bank household spending survey last month, people were spending more on petrol. The RBA referenced petrol prices in their minutes of the last meeting. So if you think that inflation is becoming more of a problem, do you guys at Macro Capital think in any way we could see some sort of a reflection of that in monetary policy? Maybe not this meeting when it comes to the Fed, but maybe next month, later?
Yeah, look, I think it's definitely a concern at the moment. I think the whole thing with the US being in a bull market right now is that it's hinged almost entirely on inflation having come back to target, and it has, like clockwork, and consequently rates eventually starting to come off. And so anything that contradicts that story, I think we're likely to see a reasonably significant move, or at least a short, sharp move. So we've certainly been looking to de-risk client portfolios a little bit. We've cut out of a few names, increased our cash balance a little bit. We are anticipating a bit of a pullback in the markets, and we'll look to deploy that cash once that plays out.
If you were going to deploy it, are you moving more into like the oil sector? I mean, there's a lot of people have been coiling going into energy. Or would you go back to the old faithful, some of the Magnificent Seven, for example? Or I don't know, how are you positioning? What would be on your shopping list for a pullback?
I think at the moment there are a few value plays that have probably been hammered maybe a little bit unfairly by the market following reporting season, and are consequently trading off their recent highs and where they maybe should be trading. I've spoken about WiseTech on the show before. I think WiseTech's a pretty attractive value buy at these levels. But again, looking to probably dollar cost average in, because there is still so much uncertainty in the markets. I think that ResMed also poses a reasonably attractive buying opportunity. But again, looking to dollar cost average in, meant to be a little bit more defensive in nature. It's not really playing out like that at the moment. But a few of those names I think have been probably a little bit unfairly dealt with by the market.
Okay, so you're not adverse to putting some growth names in portfolios. I find it really interesting. I spoke with a gentleman from IG actually, and they surveyed their client base in Australia and the UK, finding that Aussie investors are still, relatively underweight international exposure. When you're speaking with clients, do you have a lot of interest right now in global equities?
Well, the Aussie market obviously hasn't really done anything for 2 years. And so the US markets on a lot of metrics are probably a little bit overextended right now. So it's probably not a time that we'd be looking to top up heavily there. That said, we have used an ETF QUS at the moment, which provides equal weighted exposure towards the S&P 500. The theory being that those big 7 names have carried the index this year, and so the other names need to play a bit of catch up. But at the moment, the Aussie market, I think once it breaks out of its range-bound trade, should move reasonably fast. It's just about things normalising and then actually breaking out of that range trade.
Yeah, it's hard to find what would be the factors, because we're so weighted to the banks and the big miners to get that index moving. What do you think the catalyst would be for that to happen, Will?
Well, I think the key thing at the moment is still that inflation and interest rate story. I don't think there really are any other factors that could push it apart from that. I think with ore miners at the moment, if it wasn't for ore having rallied the last few weeks, the index would be significantly lower than where it is currently. But I don't think there really are any factors apart from the inflation interest rate story right now. It's all we've really been talking about for the past year or so, and those are the 2 preeminent factors right now.
God, it feels like more than just a year. All right, Will, so still diversify, hold on to some cash, prepare for, a bit of a bumpy road ahead.
Yeah.
That sums it up. Thank you so much for joining us
Will.
on this day. On this day where we're actually now watching iron ore futures edging slightly higher. They've been trading in a very tight range, but after we saw the central bank in China, I suppose their actions today reflecting some stabilization of the economy there. Just thought I'd update you on that. We've seen, a little bit of stabilization coming through in the iron ore price, but it really hasn't done anything for our big caps. In fact, let's just pause for a sec and take a look at some of these leaders and laggards. Well, let's take a look at those market leaders, shall we? And look, few and far between today.
There we go.
Aristocrat.
Yes, now I think they had a round table.
There's also a broker upgrade.
Yes, exactly, and because of the round table, I think. So Aristocrat topping the table, almost there, up over 3.12%. And I'm not sure about Fletcher Building or Cleanaway, Domain and EBT. There are a few names there that we have not seen for a very long while when it comes to performances. And I do know Fletcher Building has had considerable cost overlays, problems and this, that and the other, but maybe it's just coming off some trading lows.
Yeah,
there.
I'm not seeing any specific company news associated with it, but I do wonder if there was some data out of New Zealand potentially that has impacted its price. However, Cleanaway, besides a annual report that was put to shareholders, no sort of concrete news coming there, but clearly market liking something in there. It is sort of a motley crew.
I think we can basically look at those with the exception of Aristocrat and say that there is some bottom fishing going on in some stocks that have not performed very well.
Yeah, exactly.
That would be with my broker hat on. What I would say has probably been occurring. Maybe we can check in with some of the laggards today and see how they. Star Entertainment yet again under strong selling pressure. So down over 6%, as is Iris off almost 5%. And of course, those two have had numerous problems associated with it. Paladin Energy, it looks like the profit taking has moved into that uranium space. It's been running really, really hard of late. So Paladin off 4.7%. But when it comes to Core Lithium and Neuron Pharmaceuticals.
No news. I do know that Neuron was brought into the 200 just the other day. So there you go. You've got some unwinding happening there.
Yeah.
But yeah, there's no sort of discernible trend with these companies. Again, not a lot happening on news. We are moving into AGM season, so we'll get some more outlook statements coming from a lot of companies, almost like a mini reporting season, I've been told many times this time around, because just how swiftly The dynamics, particularly around the consumers and costs, et cetera, are changing, as we can see, just being reflected in the oil price as well. Some of the small cap leaders and laggards in the smaller end of the market. There's MedAdvisor. That is up pretty chunky, 14% or so.
Yeah.
And ImpediMed up by close to 9%. Let's flip the page and take a look at the laggards. Alligator Energy discounted placement yesterday.
Right. Now, BrainChip, of course, that has come out of the ASX 300, 200. So that one there, probably people still selling that one. And I don't know anything about ionic rare earths, down 10%. And yes, nothing on that list that sparks my attention.
Well, I was just looking at EVT, which was one of the best performers today, because I don't know why, and I can't see any news out today
I don't think
associated with
it
it.
is
So
anything.
I think that's just really some interesting dynamics playing out there for the broader market. Seeing these companies.
I think it's purely a case, if you all look at their charts, they're so oversold, or what I think some investors are going in and doing some buying there. Right, so should we check in and see what is happening overnight? Oh God, what heaven, I shouldn't say that. FOMC policy statement and the dot plot being the big factor there to move the bond markets. And UK August CPI, which
we've already got.
Absolutely, 6.7%. It has come in below expectations as food prices have eased.
So the Aussie dollar not moving a lot ahead of the FOMC, nor is the New Zealand dollar ahead of this Fed decision. But
nor are the minis. They're a little bit positive, but no, nothing much to report there. And what have we got tomorrow?
BOE now has the inflation data to churn over for a day.
Absolutely. We've got New Zealand second quarter GDP out tomorrow, ASX derivatives expiry, and looks like US existing home sales out in August and the US Philly Fed activity index in September, but I am suspecting that's on Thursday.
Okay, well, shall we give it a rest for now?
Absolutely.
Only because I'll be up at 4 a.m. I'll let you know. Should I text you?
Oh, absolutely. Absolutely. I'll just worth noting that the ASX 200 closed down 33 points or 0.46%. So it looks like the ASX 200 has actually come off those lows. CBO 200 down 8.6 points or 0.62%. So that's a wrap for today. Hey, Nadine.
Yeah, it is. Week to date down by 1.6%. Let's see if we can turn it around tomorrow. We'll see you when we're live from 9:30.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mojo.